there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for, and also tell you about the stocks that you must keep on your radar today. And first up, let's get started with how the US markets fared overnight. And it was a rather mixed day coming in as investors rotated out of high growth tech and into cyclical stocks after the Fed delivered that third rate cut of the year. For instance, Broadcom, that fell nearly 5% in extended trading despite beating expectations and projecting AI chip sales to double, while Lululemon jumped about 10% after announcing its CEO will step down in January. So yes, that's as far as some of the individual stocks are concerned. But if we talk about the indices, the Dow and S&P 500, they are coming off record losses, though Nasdaq, that slipped about 0.3%. These are tech names like Alphabet and Nvidia, all of them pulled back. For instance, speaking specifically of the indices, the Dow, that rose more than 640 points or 1.3%. It was helped by strong moves in Visa, Nike and United Health. In fact, analysts are saying that the market may be entering a broadening out phase with gains spreading beyond the Magnificent Seven. And we talk about for the week, the S&P 500 is up about 4.4%, the Dow nearly 1.6%, and the Nasdaq just under 0.1%. Small caps, they continue to outperform with the Russell 2000 up about 2.7% and hitting a fresh all-time high. So yes, that's about the indices, but looking ahead, investors will watch whether this rotation into cyclical and smaller companies that can sustain into the year end. So yes, Srishti, mixed moves on the Wall Street, but largely positive.
All right, so good handover when it comes to the US markets, but when it comes to the move in the gold, silver, as well as commodity prices, other than them, and especially the crude oil prices, they are interesting too. Firstly, with respect to the oil prices, then oil is set for a sharp weekly loss of over 3%, when WTI is seen to be stabilizing near that $58 per barrel mark, wherein there are some concerns offsetting the Venezuela tensions, wherein US natural gas prices, that has seen to be dropping to a 5-week low. But along with that, what we have seen is very good moves when it comes to the gold as well as silver prices, because gold overnight was up almost 2%. As of now is hovering around that $43 per ounce mark, but silver surged almost 6% in yesterday's trading session, but it seemed to be retracing a bit. But yes, of course, silver is very close to its all-time high levels.
All right, so that's about some of the precious metals. Silver very close to its all-time high. But now let's put the spotlight on some macro data coming out of the US. And US weekly jobless claims just posted their biggest jump in nearly 4.5 years, rising 44,000 to 236,000 level. But economists are saying that the spike is mostly seasonal noise, not a sign of labor market weakness, with the 4-week average still pointing to stability. Now, continuing claims fell sharply to 1.84 million, and the US trade deficit, that has narrowed by nearly 11% to that $52.8 billion level.
All right, moving on to another story wherein Trump has signed a sweeping executive order creating one national AI rule book, blocking states like California and New York from setting their own regulations. Trump said America must innovate without cumbersome regulation. The order is major win for big tech, establishing federal preemption, threatening the funding penalties for the states that don't comply, and even creating a new AI litigation task force to challenge the state laws.
All right, moving on then. Terra UST founder Do Kwon has been sentenced to 15 years in prison for what a US judge called an epic generational fraud that wiped out $40 billion in value. Now, the judge said that Kwon repeatedly lied to everyday investors who lost their life savings. Now, dressed in yellow prison garb, Kwon apologized in court, while prosecutors said he inflated crypto prices through elaborate schemes and fled accountability. Kwon is also expected to face charges in South Korea.
Moving on to another story wherein Donald Trump is extremely frustrated with Russia, Ukraine, as he pushes to end the war, even as he pushes for major territorial concessions as a part of the plan to end the 4-year war. Now, the White House spokesperson, Karoline Leavitt, says Trump wants this war to come to an end. Meanwhile, Zelensky claimed Washington is asking it to cede the land to Russia.
I thought that we were very close with Russia to having a deal. I thought we were very close with Ukraine to having a deal. In fact, other than President Zelensky, his people loved the concept of the deal. You know, we threw something out.
This is the four-part deal.
Well, there's 4 or 5 different parts. It's, you know, a little bit complicated because you're cutting up land in a certain way. It's not the easiest thing. It's sort of like a complex real estate deal times 1,000, right? But it's a deal that would have stopped the killing of thousands of lives every month. Thousands and thousands of lives, mostly soldiers, but as you know, there's some bombs being dropped.
Is this sort of a career-linked ceasefire that we don't resolve?
Well, there's a meeting on Saturday. We'll see whether or not we attend the meeting. We said we'll attend the meeting if we think there's a good chance. They want me to attend. They want us to attend. And we'll be attending the meeting on Saturday in Europe if we think there's a good chance. And we don't want to waste a lot of time. We think it's negative. We want it to get settled.
All right, so that's Trump on Russia-Ukraine talks. But let's move on and get you the latest in India and US trade talks. Now, Prime Minister Narendra Modi held a telephonic conversation with US President Donald Trump this last evening. Post the dialogue, Prime Minister Modi said on X that he had a warm and engaging conversation with President Trump. Now, this conversation between the two global leaders is significant, especially at a time when the delegation of both the nations have been negotiating on the much-awaited trade deal. My colleague Sumita Karir is here with all of the details of this conversation.
That's right. That's the big story. The Prime Minister has spoken to President Trump. Both of them spoke last evening on phone. And remember, this conversation is critical because of the timing of this conversation. A, the fact that this is happening after President Putin visited India last week. And secondly, about the fact that this is happening at the conclusion of the 2-day trade talks between India and the United States. We do understand that United States Deputy USTR was in India. In fact, he also held 2-day talks with India's Commerce Secretary Rajesh Agarwal. Both the sides discussed economic ties and trade negotiations. And of course, he also met with India's Commerce Minister Piyush Goyal. But coming back to what the two leaders discussed, well, they definitely discussed trade cooperation. And of course, they discussed critical technologies. They reviewed partnership in critical technologies, energy, defense, security, and of course, took stock of the India-US Comprehensive Strategic Partnership. In fact, they also reviewed the agreement to work closely and to address shared challenges. Both the sides also underlined the importance of sustaining momentum in bilateral trade. And like I stated, that Switzer was meeting with the Commerce Secretary. Yesterday he met. This was the second day of talks between both the sides. And of course, the talks overall are progressing well, is the sense that Minister Piyush Goyal stated yesterday. But he also stated in no uncertain terms that a deal is only done when both the sides stand to benefit. And we can't really put a deadline to talks. The number 2 most important thing as far as these developments of the last few hours is concerned, that Minister Goyal also reacted or responded to Jameson Grier's comments that New Delhi has made the best ever offer that United States has received, and India's proposals have been quite forward-leaning, to which Minister Goyal stated that if indeed that's the case, then the USTR should be signing on the dotted line. So what does this essentially mean? This call and what Minister Goyal is stating, are both the sides close to signing a deal, or was this call between President Donald Trump and Prime Minister Narendra Modi essentially to acknowledge efforts from both the sides to move towards signing a deal? Well, that remains to be seen.
All right, thank you so much, Sumita, for getting us all those details. But even as the trade talks continue with representatives from US, Commerce Minister Piyush Goyal has sent out a very strong message saying India will not negotiate with a deadline. In fact, he went on to say that US team should sign the dotted line if they are so happy with the developments at the trade talks. Listen in.
Give it some time. Let's not rush into things. And never negotiate with a deadline. Negotiation should always be with a sense of urgency, but never in haste. I can only say that negotiations are progressing well. We've had substantive discussions over several rounds of negotiations. In the past, I think 5 rounds have happened. Current visit is not a negotiating round. Current visit is a new Deputy USTR who has joined about 3 months ago. It's his first visit to India. We're getting to know each other. He's at the Commerce Secretary level, Vice Minister, so they're all getting to know each other well. He met me also. We had very good substantive discussions. But I've often said on record that a deal is only done when both sides stand to benefit. And I don't think we should ever negotiate with deadlines or hard stops, because you tend to make mistakes then. His happiness is very much welcome, and I do believe that if they are very happy, they should be signing on the dotted line.
All right, so that was the Commerce Minister. But we also caught up with several experts from across global bodies to understand what they are making of the last leg of this India-US trade deal. Let's take a look at what they had to say.
We must ask for a status quo ante. Since the Commerce Minister has said that this is not a negotiating round, we still have a chance to do that. That is number one. The second is that national interest has to be topmost in our negotiating format. We cannot be offering them agriculture and allied products the way they want it, because this is a most sensitive sector for India. So therefore, we cannot say that, we just need to make them happy and forget about our national interest.
If we take at the trade talks, we have had multiple rounds. This trade talk, which has happened now with Rick Switzer, is important because Rick Switzer joined the White House just in October, and he looks after Asia, textiles, investments. These are the portfolios that he handles over there. And his coming to India is probably a positive signal into how the talks are progressing, in addition to the discussions that the AUSTR, Assistant USTR, Mr. Lynch has been having with his Indian counterparts. We must also take into account the statement made by the USTR, Mr. Greer, saying that India has given some of the best offers possible till now that we have received from other countries as well. So this is the best offer that we have got, but still India remains a tough nut to crack.
Even if we have 50% tariff imposed from 27th of August, if I'm getting the date correct, that's not going to impact short-term or the long-term growth at this point in time, given the fact that it is the buoyancy and the robustness of the domestic economy which is promoting the growth. So on the other side, when we talked about the partnerships as far as energy and critical minerals and the other domains are concerned, definitely that is going to, any kind of partnership is going to augur well for India. There is no doubt. India is already having a much more diversified portfolio when it comes to its this entire GDP is concerned. And more importantly, if you look at its, as far as India-US trade talks are concerned, this is not the only trade talk that we are happening. We have already signed the trade pact with UK. We have been signing a host of trade pacts. We are getting into the in talks with the European Union.
All right, moving on then, and India and Italy have reaffirmed their push for the India-EU free trade agreement, with Commerce Minister Piyush Goyal and Italy's Deputy PM Antonio Tajani calling for faster progress on the deal. Now, both sides say the FTA will significantly expand trade and investment opportunities. Let's listen in to what they had to say.
It's very important also for Italy. Of course, we need to talk. There are problems, but I think it's possible to achieve the goal. I want to be optimistic. Beginning next year, or during the first 6 months of the next year, it's possible to achieve the goal. But it's important to talk with Mr. Šefčovič, because this is my idea. I'm not a commissioner for trade. I am the Minister for the Affairs of Italy.
Every issue is important, and no issue is such that it cannot be resolved to mutual satisfaction. So there are issues under discussion. Negotiations are done behind a closed door and not in a press conference. As we resolve those issues, we'll certainly come back to you with a good announcement of a fair, equitable and balanced trade agreement. I was very happy when I heard about the collaboration between Prada and our Kolhapuri chappal manufacturers. I had always envisaged Kolhapuri chappals to be able to do an export of $1 billion from India. And I do believe that with the partnership between Italy and a brand as reputed as Prada and India working together, our craftsmen, our artisans, our leather workers will really work together to make this a global brand, a global offering.
All right, so let's take a look at how the Asia Pacific markets have opened up after a rather positive day coming from the US. So yes, a very positive handover, but apart from China's Shanghai index, all the other indices, they've managed to trade in the green today. Let's start with Hong Kong's Hang Seng Index, which has seen gains of nearly 0.7%. 25,700 is the level that it has managed to hold on to. Nikkei 2 is trading in the green, nearly 1% of gains over there. 50,600 is the level that it's holding. So yes, very positive moves over there. ASX 200, that's also trading in the green. More than 1% of gains is what the index has marked as of now. 8,680, that's the level that Australia's index is holding. But if you talk about China's Shanghai index, that's trading with cuts of about 0.5%, just managing to hold to that 3,850 level. So yes, apart from all other indices, China's Shanghai, that continues to trade in the red with cuts of about 0.5%. All the other indexes, they are in the green. If you talk about South Korea's Kospi, that's also trading more than 1% higher right now. 4,158 is where it is trading right now. So yes, pretty good moves over there. But let's also put the spotlight on Nifty. We did see a very good recovery in Nifty yesterday, but of course we couldn't close above that 25,900 mark, just short of 2 points as far as the 25,900 level is concerned. But yes, 25,898 is where Nifty ended, and for today we are expecting a gap down start. The Nifty implied open is suggesting about 320 points of cuts at the start. So yes, we'll wait out for how the D Street opens. But yes, for now, the overall global cues that remain positive. But for now, we're expecting a negative start as far as the Nifty is concerned.
So that's about the kind of handover we are getting from the Asian markets. Yes, of course, GIFT Nifty is indicating a positive start for us. And even just yesterday, we have seen very good moves all across the board, and even the broader markets were seen to be participating. But how are the internals looking like? Which were the top movers? Which sectors were the gainers? Let's get in all those details, and let me take it across to my colleague Snehi for the market wrap. Snehi.
Well, yes, overall a good day of trade for something that started off very soft but picked up steam towards the midday mark of the market session. So 0.5% uptick is where we shut shop for the Nifty, very close to the 25,900 mark. So 25,898 to be precise is where the Nifty shut shop. So it was a good sensex expiry day for the market. You had the sensex also that closed with an uptick of about 0.5%. Nifty bank pulled back slightly from the day's highest point, but nonetheless managed to close with an uptick of about 0.4%. It was names like Adani Enterprises, Geo Financial, Eternal, Tata Steel, Kotak Mahindra, Dr. Reddy's, Grasim, that saw gains of anywhere between 1.5% and 3%. On the Nifty 50 winning side, on the flip side for Nifty 50 losers, Asian Paints, Bharti Airtel, SBI Life, Axis Bank, these saw some nominal cuts. The advance decline ratio was quite in the favor of the advances, which is why the mid-cap end of the market was up about 1%. The small-cap end of the market also saw stellar recovery, up 0.8%. You had the India VIX that had cooled off as well. Sectorally, all the sectors closed in the green, with auto, metal, pharma, IT leading the charge, followed closely by realty and financial service, then followed by PSU banks, energy, and Nifty FMCG was the least gaining sector, but has managed to close in the green nonetheless, because Godrej Consumer Product, Varun Beverages, Emami, Patanjali, all of these stocks have done very well. If you take a look at some of the stocks from the broader end of the market, the top performers of the market were Dixon Tech, a 5% uptick. BSE Limited also did well, about 4.5% higher. Premier Energies, Tata Elxsi, Persistent Systems, 361 WAM, all of them have done well. On the flip side, slight pressure names like AU Small Finance, M&M Financial, Supreme Industries, Coromandel, Cochin Shipyard and Aditya Birla Capital. From the mid-cap end of the market, these were the top performers. On the flip side, Ola Electric, Natco Pharma, Ircon, Angel One were the top performers from the smaller end of the basket. So all of these stocks have done very well, and overall it's been a positive sensex expiry. All eyes are going to be on how the market reacts to sum up the week on the last day of the trading week.
All right, so it's the last trading day of the week. And now, which are the stocks that are going to be in focus? Ravinder is here with that list. Ravinder, over to you. Good morning.
Well, yes, Tata Power can be in focus, where company has received a LOI from REC Power Development and Consultancy Limited, which is a wholly owned subsidiary of the REC, for the acquisition of Jejuri Hinjewadi Power Transmission Limited, and the size of the order is 156 crore. On the back of acquisition, Honasa Consumer can be in focus, where company has approved the acquisition of BTM Ventures Private Limited, and company will acquire majority 95% stake in BTVM via secondary purchase of rupees 195 crore, and the company will acquire a remaining 5% equity stake of BTM Venture via secondary purchase upon the completion of the 12 months. So back of this acquisition, these stocks can be in focus. Another stock can be in focus on the back of the order win, that is NBCC India, where company has received a work order of rupees 289 crore from the two different clients. Astra Microwave can be in focus on the back of the order win, where company has received work order of rupees 171 crore from the Indian Meteorological Department. And lastly, Shine can be in focus, where company has announced a strategic acquisition of Abu Dhabi based technology consulting and digital service company. So back of this acquisition, Shine can be in focus.
All right, thanks, Ravinder, for that list. But that's not all. We have a couple of more stocks that are going to be in focus. And let's start with Crompton Greaves. Now, this one has received a letter of award. So, yes, an order win for this company from the Maharashtra State Electricity Department. Now, this is for an EPC contract for solar water pumping system. Now, it's worth nearly 29 crore rupees. So, yet another positive news flow for Crompton Greaves. And we'll watch out for how the stock reacts. Next up on the list is Indoco Remedies. Now, this one has received an EIR from the US FDA. This is for its API manufacturing facility in Patalganga. So, yes, we'll watch out for how the stock reacts to this development as well. Next up, let's talk about the pharma space and see which stocks are in focus. Piramal Pharma. This one has received a US FDA Form 483 observation. This after goods manufacturing practices check with 4 observations at its US plant that is in Kentucky. So, yes, we'll wait for how the stock reacts to this. And next up, let's talk about Kirloskis Ferrous Industries. Now, this one is going to be in focus because it has suspended operations at its Karnataka plant. Now, remember, this one, these operations continue to be suspended for an additional time that's required for maintenance and repair activities. So, yes, negative news flow here, and we'll wait for how the market reacts to this latest development. And yes, let's move on and also talk about Interglobe Aviation. That's the biggest laggards for the past few sessions, and looks like there's more pain in store for the company. For the airline, CEO Peter Elbers, he's been asked to appear before the DGCA committee on December 12th, that is later today. So we'll wait for the latest developments that come out of this meeting from his appearance before the DGCA committee, and the latest on the disruptions that Indigo has been seeing, and we'll see if the stock continues to react negatively as it has been doing for the past many days. Next up, let's talk about Sangvi Movers. Now, this one has signed an MOU with ACE. This is to boost deployment of heavy slew cranes within India. So, yes, positive news flow here as well. And lastly, let's talk about Pine Labs. Now, 3% equity lock-in that opens today for Pine Labs. So, this one is also going to be in focus, and we'll wait and see how this market reacts to this development.
The spotlight on Interglobe Aviation, because Indigo Airlines, already facing massive scrutiny post the cancellations of flight, has now come under the lens of Securities and Exchange Board of India. Now, the market regulator is probing whether Interglobe Aviation, Indigo's parent company, failed to make required disclosures. Let's go live to Charu for more details on the story. Charu, take it away.
Troubles for Indigo are mounting continuously as the Securities and Exchange Board of India is joining hands with the National Stock Exchange to sort of understand if there was any delay on part of Indigo's parent organization, Interglobe Aviation, in coming out with their disclosures. So what has essentially happened here is that SEBI is looking if the DGCA notices were given to Indigo in a manner because of which the company was not able to give timely disclosures, and if there was a delay, why did it take place, what kind of issues sort of paved way for this delay that happened on Indigo's part. Now, what is essentially going to happen here is that NSE is going to ask for more and more information about why there was a delay on part of Indigo to give exchanges the information that it is supposed to give according to LODR norms. Once this information is given to NSE, it is going to relay the same information to the Securities and Exchange Board of India, which in turn is going to investigate the matter and see what can be done further.
And it's time now to talk about some corporates. And former builder to cloud player Anant Raj is now mounting an ambitious data center push by 2032. Backed by real estate cash and proprietary cloud strategy, the company is betting that co-location and cloud together, they'll power its next big growth story. Now, in this edition of the interview, we caught up with the MD, Amit Sareen, to understand the company's data center roadmap, revenue visibility, and the capex behind this big transformation. Let's take a look at what he had to say.
Once the whole revenue comes in, we are going to comfortably cross about almost 650 crores of revenue only from the data center segment. And this will further keep on going because the capacity will also then keep on increasing. So as of now, we started with 3, then we took it to 6, and now we are at 28. This 28 next year will go to 63. As of now, the major revenues are all coming in from the real estate business. But from this year, data center has substantially started to contribute. So once the capacities start getting revenue from our capacities, to start climbing up.
All right, and it's been a good year for the metal stocks because this year the index is up almost 20% amid the geopolitical risk and global growth concerns. While the government support measures like anti-dumping duty for the Indian players seems to have helped, the demand and the pricing concerns do remain though. In this backdrop, how does the space look going ahead in 2026? Let me take it across to Ashesha with a bull versus bear case. Ashesha.
Well, yes, so the Nifty Metal Index is up a solid 20% on a year-on-year basis. Commodities continue to rise in the global market, especially after the Fed rate cut announcement that came in. So we decided to take stock of the factors that continue to remain at play for the entire metal space. First up, let's put the spotlight on the China factor, which is the most important and the biggest factor which continues to weigh on the metal sector. Remember, Chinese government has been trying to stimulate the economy for quite some time, especially post-COVID, but that clearly is not playing out in favor of commodities globally, and that is not really moving the needle. So Chinese government is doing its best, but the stimulus measures clearly are not sufficient and they are not supporting a commodity market globally. So this clearly is the biggest factor. China, remember, consumes nearly 50% of most commodities in the global market. So this is the most important factor continues to remain at play in 2026 as well. Other than that, global factors, remember, dollar index continues to weaken, and that is a positive for metal stocks because dollar index and metals and commodities globally have inverse relation. But also remember, China continues to dump goods in the global market in countries including India, and that is hurting domestic mills because cheaper import of steel and other metals into India is a negative for domestic steel and other metal players. So that continues to remain a problem. So this is another global factor to keep an eye out on. Other than that, inventory on London Metal Exchange continues to be on the lower side, especially for zinc, copper and aluminium, and that is aiding copper prices in the global market, not just copper, zinc and aluminium as well. But on the flip side, ferrous prices continue to remain under pressure, whether it is steel or iron ore. Chinese demand continues to remain on the weaker side, and that continues to weigh on steel prices not only in the global market but in the domestic market as well. And not just steel, iron ore prices too continue to languish on account of weaker steel demand in the global market. So that's how the inventory setup is looking like, and also when it comes to the impact of inventory on global commodities.
Meanwhile, remember, domestic government is trying to impose safeguard duty in order to protect domestic mills from influx of cheaper imports into the Indian market, but that clearly is not working. Government is trying to stimulate the economy. Several steel players have also urged the government to increase safeguard duty because the current 12% is not working out, but that continues to remain a factor to watch out for, and government perhaps in the near future could actually go ahead and increase safeguard duty beyond that 12% which was imposed in April this year. Other than that, let's also talk about rupee depreciation, which continues to aid higher export demand because Indian commodities continue to remain cheaper in the global market, because of which export demand is likely to inch higher. But we also import a whole host of raw material, whether it is for steel manufacturing or other commodities, coking coal, coal and several other imports that become expensive on account of rupee depreciation. Meanwhile, use cases continue to increase, especially for select commodities like copper, aluminium, electric vehicles, data centers, renewable energy, continue to drive demand for several commodities. But on the flip side, adoption curve continues to remain slower than expected, despite expectation of increase in demand from electric vehicles, data centers and several other new use cases that are now emerging. Now, as far as demand is concerned, remember, demand in the domestic market continues to remain very resilient despite the kind of challenges that we are facing in the global market. But exports, meanwhile, continue to remain weak on account of tariff concerns, on account of growth concerns in the global market. So that's how the demand setup is when it comes to domestic demand versus export demand environment. But the last and the most important factor is the change and the trends that we are seeing in the manufacturing of commodities in the global market, and the most important is decarbonization. Companies not only in India but globally are focusing on decarbonization, but that also means that costs are likely to increase going forward. Steel mills will have to focus on electric arc furnaces, which of course involves a high amount of capex. So that's the latest trend that we are seeing in the steel and several other commodity sectors as well. So that's the bull and the bear case scenario for the metal index in the coming year 2026.
So that's all about the metal sector, which has seen growth of nearly 20% in the year 2025. And one of the outperformers is always, it's been Tata Steel. It has seen growth of more than 20%, that is 21%, almost about 22% as far as the year-to-date charts are concerned. So yes, very good growth Tata Steel has seen, and it could be set for another major capex over the next few years. Just day before yesterday, it released its capex plans for the years to come, and yesterday it also held a con call with management, and Shesha is going to be back with us to take us through all of the key takeaways. And the company says that the company has given us its growth plans in their latest con calls, and Shesha is back with us to take us through all of the highlights.
Well, yes, we had taken you through the capex announcement that came in from Tata Steel day before yesterday, where they said that they are looking to add capacity in India to the tune of 10 million tons per annum by FY30. Now, remember, Tata Steel's global capacity currently stands at 35 MTPA, out of which India capacity stands at about 25 MTPA, which they are now looking to increase by about 10 million tons per annum as a result of the capex plans that they announced day before yesterday. The company, of course, in the con call yesterday did not specify the quantum of capex or the impact on debt on account of increase in capex. These details were not given in the con call, and the management said that perhaps these details will be given by the end of the year once the capex is put into place. But we have some brokerage houses which have come up with their reports on the estimate of capex that is likely to be incurred by Tata Steel. Nuvama, first of all, says that they estimate growth capex to the tune of 95,000 crores to 1 lakh over a period of next 6 years, which is by FY30. They believe the expansion will be internally funded and net debt is not likely to rise on account of this. So that is one important estimate which Nuvama has given after the Tata Steel con call yesterday. Citi, meanwhile, says that they believe exact capex timelines and contours will depend on clearances, demand and profitability, and how these three factors shape up going forward. So they have not given an estimate, but they believe that it is likely to be decided in the due course of time. Centrum, meanwhile, says that leverage trends amid rising capex will be the key monitorable, but Neelachal Ispat expansion and potential greenfield opportunity under the MOU that they have signed with Lloyds Metals will be the key driver of growth for Tata Steel in the long term. So yes, Tata Steel management has not given any capex or debt guidance, especially because of the rising capex, but brokerage houses believe that it could be anywhere between 90,000 crore to 1 lakh crore over the next 6 years.
All right, thank you so much, Ashesha, for getting us all those details. But now let's put the spotlight on Honasa Consumers, as the company has entered the men's grooming segment with the acquisition of the brand Reginald Men. Now, they have initially acquired 95% stake in BTM Ventures, and the remaining 5% will be acquired after 12 months. Let me take it across to Snehi for more details. Snehi.
Well, yes, so this is Honasa Consumer into the men's personal space category, personal care category, and that is a very big move for them. This has happened with the acquisition of BTM Ventures Private Limited, and remember, BTM Ventures is the parent company of Reginald Men that that Honasa has acquired. Now, how is this an opportunity for Honasa? Let's put it in numbers. The category, channel, and geography expansion provide a good growth roadmap to Honasa. Indian men's personal care market is expected to reach more than 40,000 crore rupees by FY32. So watch out for that as well, and this will help Honasa strengthen its market share in the southern states. A little bit about the brand that they've acquired, Reginald Men. It was founded in August 2022 by Trisha Reddy Talsani, and they make products like sunscreen serum, hair serum, moisturizer, face washes and cleansers for men. They derive the majority of revenue from South India, so this also strengthens Honasa's presence and brand awareness in the south of India. Now, if you take a look at BVPL's revenue trend, they started with mere 43,000 rupees in 2023-24. 24-25 a sharp jump to 20.2 crore rupees, and October 2024 to October 25 this year they've done revenues of about 74 crore rupees. Other than that, with net revenue being at 74 crores, their EBITDA is at 18 crores with a healthy EBITDA margin of 24%. So the financials look very good for the company that they have acquired. Lastly, the terms of the transaction, Honasa will acquire 95% stake via secondary purchase of 195 crore rupee enterprise value. The balance 5% stake will be achieved after 12 months based on pre-agreed valuation criteria. On an annualized April to August 2025 revenue run rate, this implies the EV to revenue at 2.6 times and implied EV to EBITDA at 10.9 times, making this deal look attractive. Just to throw some more light on past acquisitions by Honasa, remember this is not their first D2C acquisition. They acquired B Blunt in 2022, Dr. Shades in 2022. They've acquired Cosmogenesis Labs for their in-house R&D in 2024, and very recently they acquired 25% stake in Fang Oral Care. They also forayed into the oral care segment in 2025 recently. So this adds to their list of all the D2C acquisitions that they've made recently. But yes, this is Honasa's latest acquisition that helps it foray into the men's personal care space.
All right, so that's all about Honasa's latest acquisition. But with that, we're completely timed out in this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere. The market will take all the action forward.